Hey traders, Jason here from Leavitt Brothers. Happy Sunday. Today I'm going to talk about a way I trade bottoming patterns. Like everything else I do, it's pretty simple. I use standard charts with standard indicators that are available for free on any charting program. Okay, nothing's proprietary, nothing is overly complex. I use this setup or sequence, if that's what you want to call it, both when playing a reversal or when playing a counter move within an established trend. So for example, I'm going to pull over a blank slide here. So for example, I'll use it if the market, kind of does this and starts a reversal. Okay, there's a certain sequence that I'll look for. I'll also use it when the market moves up, I should say an individual stock moves up and then pulls back and then here. Okay, so in both cases I'm using it for a reversal. I'll do it on the other side when I'm looking to go short, but since I trade a heck of a lot more to the long side than the short side, I'm going to go through all my examples here are just with long trades. All right, so this is how I use it. I'm going to focus on a whole bunch of examples where this is how I use it for reversal patterns here. All right, so let's get to it here. All right, so here is Domo. What I have here on all these charts, except for one, which I'll note, we have daily on the left side, and we have hourly on the right side. This is not my live trading platform, so I can't click around and zoom in and zoom out. These are screenshots that I've just clipped. All right, so what we have here is we have market moves down, I should say the stock moves down and then up, okay? And then when that happens, that first move up is strong enough that you get an MACD cross at the same time that the stochastic is pointing up. Okay, so the move up is strong enough that you get a reversal of these indicators. Then what happens is you get a subsequent move down and then a reversal of that. And when it moves down, the MACD stays in the crossed up direction. Okay, sometimes you get a kiss, sometimes it just stays up. I like to call this my kiss and cross setup, where the MACD will dip back down a little bit and then start to expand at the same time that the stochastic cycles down and then crosses again. Okay, so again, it's like the first move up has a certain amount of energy that causes the MACD to cross up, stochastic crosses up. Okay, then the next drop lacks energy, so the MACD is able to stay in the crossed up direction and the stochastic simply cycles down and then recrosses. So what we're going to do here, I'm going to zoom in on over here. Whoa, that's not what I want. I'm going to zoom in over here. Okay, so this is the daily chart. Now I'm going to look over at the hourly chart on the right side here, and while this second move down is taking place, I'm getting a positive divergence. So here's the move down. Here is positive divergence up on the MACD histogram. Then you get a cross here at the same time that stochastic is moving up, and then that's your signal. Okay, in this case the stock gapped up, moved sideways into a couple key moving averages, and then continued on. Okay, so on the daily chart it looks like a W pattern, and then I zoom in on this part of the second leg down, and I'm looking for, I'd like to get a positive divergence. Sometimes you just get a cross at the same time the stochastic cross up, and that's your buy signal. All right, let's go to the next one. All right, so here is ZIXI. You get a move down, move up, move down, and then we move up again. Same W pattern. On the first move up, you get a cross. On the subsequent move down, this comes down and kisses and then continues on at the same time that the stochastic cycles down and crosses. Okay, so what this tells you is that the energy on the way down here was a lot less than the energy on the way up here. So that tells you that a reversal is taking place. Now it's not going to just V bottom every time. It takes a little bit of time, especially after a big drop. But again, energy over here is less than energy over here. So a bottoming pattern is forming. So let's focus in on this, which is this area here. Okay, zoom in on the hourly. You get, obviously it's steadily moving down. Hard to see here, but you actually do get a positive divergence. MACD crosses right here. Stochastic is pointing up. So in this case, the stock gapped up over here, dipped back down, moved up, and then it moved sideways into the 8 EMA and then continued on. Okay, same exact sequence. Obviously this happens all the time, but when you couple it with the moving averages, not the moving averages, when you couple it with some indicators acting well, then it becomes playable. Okay, because if you get a move up here and then a move down, the MACD can cross up, but then it can cross down, and then it's no longer a trade. So I'm looking for the MACD to like hold that line and can stay in the crossed up direction, and that's when I'm going to zoom in with the 60-minute chart and look for an entry. All right, next one is CarGurus. All right, so we got to move down, move up, move down, move up. Okay, so we got a cross here. On this move down here, it comes down, the MACD comes down, kisses at the same time that we get a cross over here. Okay, so now let's zoom in on this area here, which is over here. Okay, you got a positive divergence, MACD crosses, stochastic crossing up. Okay, pretty simple sequence. I look for a bias on a higher time frame, and then I'll zoom in with a lower time frame to time an entry. Okay, sometimes you get a gap up here and then it moves sideways into a moving average. Sometimes it gaps up and just kind of grinds higher. The entry isn't always easy. Okay, but I would rather, if this stock closed over here near 16, I would rather be buying this stock over here at 17, knowing that I could, I know where my stop is. It's either going to be low of the day or it's going to be yesterday's close. Depends on how things are, depends on how big it is. But I have a very clearly defined stop, as opposed to, hey, I'm just going to buy here as the stock is falling and hope that it reverses. Okay. All right, let's go. I think I have another chart of this. Yeah. So this is CarGurus again. It's still the daily and still the hourly, but I've moved the hourly forward a few more days. So the bottom was over here. Okay. So this area right here is just this candle there. So I want to show you how the trade ended. So the stock moved up, moved down, got an MACD cross. It moved up one more time, but the energy on this move up was less than the energy on this move down. So the MACD didn't cross back up. It just kind of rode down here, kissed its other line, and then continued down. Okay. And at the same time, the stochastic over here failed to match the move, and then it crossed down again, and it moved down. Okay, so in this environment, today's environment, where trades are working really well, in this case, the stock moved from 16 up to 20. It's a great move. Stocks are working really well, really quickly, but they're also giving gains back if you stay in too long. Okay, so that's enough for me to get out. On the hourly chart here, came down to the 21 moving average, moved back up. We got this kiss and cross between here and here, and that's enough. As soon as, even if you give it a little bit of a room, as soon as it goes below the 21 here, because the 21 held here, as soon as it goes below the 21 here, I'm out. Okay, still a great move. You're not going to get the exact bottom. You're not going to get the exact top. You're just looking for a chunk in the middle. If you're good, you miss the first 10 to 20%. And then you're going to miss the last 10 or 20%. So if you can get a big chunk in the middle, that's all you're looking for. Don't fantasize about nailing tops and bottoms and stuff. It's impossible. Just get a chunk in the middle. All right, next one, KL. Kind of a sloppy one here. Got a gap here. Not even interested in playing it. But when it comes up like this and you get a cross, stochastics moving up, plus it gets above the 21 here. You can see how the 21 pushed it back. Even here it's a little bit sloppy, but on the way down the 21 was capping at each rally attempt. Okay, so when it got up here and it started trading up here, I get interested. Okay, so it moves down here, takes out those moving averages, but doesn't take them out with force, doesn't like slice through them. You can see volume here. So if we zoom in on this area here, okay, that's this here. Okay, you can see stock moves down, positive divergence, MACD crosses up here, stochastic doing well, Stock moves up, moves sideways into some key moving averages, and then continues on. Okay, so this is kind of a sloppy mess, but then the indicators are actually moving relatively cleanly, smoothly, so they clean things up and they help get in, help us with an entry. Okay, pretty simple. Okay, move up, move down, move back up. In this case, it wasn't like a double bottom where the bottoms were close to each other. Obviously, big difference between the bottoms here, but still playable. You're looking for evidence that the move up here has more energy than the move down here, and that causes the MAC to cross up here, and then the subsequent move down is just enough to like maybe move it back towards its signal line, and then continue on. All right, let's look at another one. See, I got two more here. All right, so here is Crocs. Okay, move down, move up. The move up causes this. The subsequent move down carried less energy than the move up. So all you got after the MAC expands, then it kind of contracts a little bit and then expands again. Same time that move down here enabled the stochastic to cycle down and then reassert itself. Okay. In this case, the MACD is kind of like a longer term indicator, whereas the stochastic is like shorter. So while the MACD stays in the crossed up direction overall, the stochastic can cycle down, cycle up, cycle down, cycle up, and give you entries, entries, entries. Okay, so again, let's zoom in. This chart's a mess. Let me get rid of that stuff. Let's zoom in on this here and look for an entry. So I zoom in on the hourly chart. Crocs moving down here. We get a positive divergence. Then we get a cross. Stochastic moving up. In this case, the stock closed strong on this day. The next day it moves up, and then you can see it just like steadily moves up all day. So a little bit harder to trade that one, but this is an hourly chart, so even a candle here where, let me again get rid of this stuff. Even a candle, this very first candle that forms above the 21, see how the 21 capped it right there, and then this candle gaps up and establishes itself over the 21. You can zoom in even further with a 15-minute chart and look for an entry if you're not confident you're going to get it on the hourly chart, or as it starts moving up, you might have to just chase it a little bit, which again, it's not a bad thing because you're chasing a really strong stock. You can put a stop in below the low, which is a heck of a lot better than just trying to guess a bottom. If you wait till the signal forms, you miss the bottom, look for signals at the top, you miss the top wherever the top is. You're only trying to get a chunk in the middle. All right, next one, last one. Red Rocks Resort, move down, move up. The move up was strong enough. You can see here it rode the 8 EMA down. This move up was strong enough. We had several up days in a row, got above the 8 EMA, MACD crossed, stochastic pointing up. This moves down, then reasserts itself. While it moves down, the MACD remains in the crossed up direction. Meanwhile, the stochastic cycled down and then reasserted. If I zoom in over here, we get lower low, higher low, cross, stochastic in pretty good shape, and stock gaps up, kind of moves sideways, moves up and sideways to some moving averages. And then it continues on from there. Doesn't go that far, okay? But in today's market, I mean, even in a normal market, this is usually good for a 10, 15, 20% move. In today's market, things happen a lot faster. Okay, so if you play this day, then the next day, you're already up 2 points. If you held here as a test of the 21, then the next day you're up another point. All right. So nothing complex here, no secretive stuff. I don't play every setup that crosses my desk. There are various reasons why I wouldn't play a stock, such as the stock is either too cheap, or maybe it lacks volume, or maybe the bid-ask spread is too big, or it lacks smooth movement, or it gaps too much, or it's just too herky-jerky. There are several reasons why I'll look at a chart and say, I'm just not interested. But you really only need 1 or 2 good trades at a time. Okay, a simple strategy that works, that's relatively easy to execute. That's all you need. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button. Check out Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. There's a link below. Also, check out my mini masterclass in trading. It's free. There's also a link below. All right, see you next time.